Hi, so welcome to my analysis of the upcoming IPO of Zomato. It is a very exciting company. That's no doubt a very big growing company as well. But we need to analyze the risk as well before we make a decision that do we want to apply in the IPO or not. And we also need to look at the opportunities as well to decide that, oh yes, these are good opportunities for the company and it will be growing in the future as well. So let's jump on and let's discuss what the company is and what are the growth and opportunities and the risk which the company has. So firstly, there are three stakeholders for the company. Number one are the customers who order from Zomato. The second stakeholder will be the delivery partners who help the restaurants deliver the food to the customer. And the third will be the restaurants. So the restaurants mainly prefer Zomato over any other platform because of the quantity of orders they get on from Zomato is very high. So one of the reasons they prefer Zomato as a platform is because it is widely accepted in the Indian market and it has a good network as well. So if you see the revenue from operations, they were coming down in FY20. There was loss as well, and in the first lockdown, the revenues came down by about 23%. But then in quarter second of financial year 21, the company started to see a rise in the revenue, and the gross orders in quarter four of financial year 21 hit a record high, and there has been a good recovery in the financial year 21. And one of the main reasons why this happened was because the company increased their commissions and delivery charges. So what led to this was in financial year 20 they were facing loss on every order, but per order there was a loss. But in FY21, because of the higher delivery charges and higher commissions, the company started to see a profit per order, and this is a really good growth opportunity for the company. If they keep growing this way, then their profits will be higher. And the second lockdown was also good for the company. It didn't face a lot of issues because the deliveries were going on, so the company didn't face any issues in the second lockdown. So in a way, the second lockdown wasn't bad for the company. And these were the financials which I looked at, and I thought that I should convey these financials to you. So now let's do a SWOT analysis. So SWOT stands for SWOT, and the full form is strengths, weaknesses, opportunities, and threats. So firstly, let's talk about the S, which are the strengths. So firstly, the strength of this company is that it has a first mover advantage in many economies which it is working in. So for example, the foreign countries as well, the countries Zomato is aiming to enter, it has a first mover advantage. Secondly, it has a lower capital expenditure. So what that means is that it is firstly a technological company, and most of the technology company don't require a high investment on capital expenditures such as machinery, on assets and many more stuff. So they don't need a lot of investment in capital expenditure. And thirdly, they have a good network of restaurants. So the restaurants who are with Zomato and are registered on Zomato have a good understanding with the company, and they have a good brand image as well. The restaurants have a good brand image, so this helps Zomato as well. And fourthly, there is an increase in digitalization, and which has led to a lot of people having smartphones, and a lot of people are using internet now. And with the growth of internet, this company should grow as well. And another aspect which I see is which has brought us to be working from home or to be staying at home has brought a change that a lot of people now are ordering food online. Firstly, when they were working or they used to go to the office, they used to get food somewhere there in the cafeteria, for example. And now what they are doing is now they are ordering food from Zomato. So in a way, the coronavirus was a blessing in disguise for the company, and this has led to a higher growth of the company and good prospects for the company in the future. And one of the main factors which are there is the shareholding pattern. So the shareholding pattern of Zomato is very strong. Info Edge holds around 18% of the company. Then there is Uber, which holds around 9% of the company, if I'm not wrong. And then there is Alipay and Ant Financial, which is founded by Jack Ma. And then there is the management is also pretty strong. So in a way, the shareholding pattern of the company looks very strong and solid, and this is a good advantage for the company. So yes, these are the strengths for the company. So now let's talk about the W in the SWOT analysis, the weaknesses. So one of the weaknesses Zomato has is that there is a lot of competition in the industry it is working in. So what this does is it limits the growth of the company. So there are a lot of competitors for Zomato. For example, there is Swiggy or there is Uber, which are also in this business. And what this does is that this industry cannot have a monopoly business, and sometimes that might limit the growth for the company. Then there are some negative feedbacks as well for the company on their website, and what this does is that because of the restaurant or because of the delivery partners, there are negative feedback and negative reviews for the company, and what this does is that there will be a shift from the platform, from the Zomato platform to some other competitor's platform, and these things are not in the hands of Zomato. So yes, this is also a weakness. And for Zomato to have a global presence, they need to go and be in those markets where they might have first mover advantages. But in the developed economies, there is already a lot of competition. For example, in Singapore, there will be a lot of delivery platforms which are used, for example, Food Panda, or there is Grab. So to penetrate those markets, it's a big threat or a weakness for the company, and it is a very big task for them to penetrate those markets. And this is not a very big weakness, but sometimes what happens on Zomato is there is outdated content as well, and what this does is that the brand image of the company as a whole doesn't do well. Like if I personally see a outdated content or a outdated menu of a restaurant, I would just go on some other platform and look for the same menu on some other platform. And what this does is that the customer base gradually would start to shift to the other platform. So yes, this is also a weakness on which Zomato has to work on. So yeah, these are the weaknesses. So now let's talk about the O in the SWOT analysis. Opportunities. The Indian food market is projected to grow by 4 times from here by the year 2026. And what Zomato can do is gain the highest market share in this industry. And for you as investors, that will be a big advantage. If that happens, your wealth is going to be generated for sure. Secondly, the people in India have a changing lifestyle. They have a very hectic schedule, and they have some preferences as well. So what Zomato can do is, with that hectic schedule, Zomato can provide some healthy options as well on the platform. They are doing it, but they can have more restaurants which provide healthy food as well. And what this will do is more people will shift onto the platform because of their hectic schedule. Currently, Zomato is highly concentrated in the metro cities like in Bombay, Bangalore, Delhi, but the government is now supporting the growth of the second tier cities as well. So what Zomato can do is go and have an early mover advantage in most of the cities. With the growth in those cities, Zomato can also try to grow as much as it can. Fourthly, what Zomato can do is they can provide electric vehicles to the delivery partners. In a way, what this will do is that it will show the company is doing their bit for for the environment, and their delivery partners are delivering in the most eco-friendly way as much as they can. So now let's talk about the T in the SWOT analysis. Threats. So currently there are a lot of legal cases which keep coming up against Zomato, and what this really does is that it has a negative impact on their brand image. So yes, this is a threat for the company. Secondly, the government policies keep on changing in this industry, and it generally affects the players in this industry. So there is not a clear policy in this industry. What really happens is things keep changing, and because of that the business also keeps changing. Thirdly, the business model right now is very much dependent on the restaurants and the delivery partners. So what really happens here is that eventually they are dependent on the restaurants and the delivery partners. So the company as a whole is dependent on some other partner. So what really happens is that if they do any ill effect on the company or their business, then what really gradually happens is that it generally has a bad effect on the company as well. Fourthly, Zomato as a company right now is trying to aim to get into the grocery business as well, but Amazon as well has started to get into this industry. So what would happen in the long term is that Zomato and Amazon can be competing against each other, and Amazon as a company is very big, so let's see if they can compete with Amazon, and yes, it is a threat for the company. Lastly, after analyzing the various factors for Zomato, the big question which comes up is, should we invest in the IPO or not? I would say yes, you should invest, try your luck, and if you get it, then yes, it is going to give short-term gains for sure. So there shouldn't be a problem that you won't get any gains. On the opening day as well, I think it will open with the premium, and that would lead to you having a profit. But there are some risks in the company as well, and those risks are big. So to have this company in your long-term portfolio, the company still has a lot of work to do. So if you're a firm believer in this business and you think that Zomato as a business is going to have the monopoly in the industry or is going to be the leader for the coming years, then yes, you should invest for long term, because then your investment is going to grow in 2-3 times for sure. So for short-term gains, yes, for sure there will be some short-term gains, so you should apply for that. And for long-term, the business is right now in a phase where it is not that clear, but still there is a long way to go, and it is an early stage for the company. So yes, this can be a good long-term investment as well. So yes, from my side, you should apply for the IPO.